Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So as you know, software companies have not done well over the last couple of months. A lot to do with the fact that apparently AI is going to revolutionize that industry. You get headlines like the software stocks under threat from AI. Everyone thinks for that reason, these companies are not going to do well. And we have something like the software stocks who are plummeting this week after the cluster of troubling earnings reports. And that was basically something to do with Salesforce. And then they mentioned a couple of other companies that have not done well and actually basically pulled down their full year revenue forecast basically that week when the companies were reporting. And of course, because of that, a lot of these companies actually went down. Now, of course, some companies actually went down and companies came out and said the revenue is not as basically what we expected initially and so on, and guided slightly lower. But that doesn't mean that's basically the end of the world, and not every single software companies out there should be treated equally. So some of the companies that you see here are companies that have not been around for a long time. For example, Snowflake, okay? But you've got mature companies that have been around, have basically a wide economic moat and will not be affected by the generative AI, and have actually been using generative AI before this boom has started. So what I would like to do today is just share with you guys one company that I feel like basically is undervalued at the moment. So share with you guys what the company does, their financials, and moving forward basically what I would do if I'm interested in the company, because I do not own it right now. And I'll let you know all of that, inshallah. As always, it takes a lot of time and effort to put these videos together. I would genuinely appreciate if you can join us on the Patreon account, where it will basically cost you about 15p per day, and you get a lot out of it. You get the Discord, where a lot of brands are sharing good practices. You get all the buys and sells that I'm making. You got the family portfolio updates. You got the dividend trackers and so on, and you get the Sharia compliant investing ebook. And if you're new to the stock market and you have absolutely no idea, this is a good place to start. I also have another PDF that I'm putting together now. I'm actually just finishing off, inshallah. I'll be posting it next couple of days, that I would like to share with the community as well. So you get basically a few things in there, and of course try it out for 1 month and you see how it goes, inshallah. Hopefully you'll like it and stay with us for a long time, inshallah. Now let's get started with the video and let's talk about this company. Autodesk is the company that we're talking about today, and as you can see, it has not actually performed well at all. So a year to date is actually flat. So 1 year was about 16% up. The last 5 years, remember this is just the price, okay, is up about 41%, let's call it 42%. And in the last 10 years, 329% up in the last 10 years. Now let me show you one of the reasons I really like this company. So when they reported June 12th, okay, basically Morningstar said, okay, we're going to keep our fair valued estimates exactly the way it was, $275 per share. And right now, as we can see here, is $242 per share. And the reasons, they said management basically maintained its full year target for revenue and margins while increasing its earnings per share guide as well, which is quite nice. We are encouraged by Autodesk to continue resiliency and renewable momentum, and our long-term forecast remain intact. So which is really nice to hear. And they talk about the fact transactional model transition is progressing well, which provides a positive indicator for the future upside. Although basically, altogether, we view the current stock as undervalued. Okay, which is quite nice to hear. Okay, so it's basically they feel like it's undervalued at the moment, and they talked about a few other things that basically to talk about. Remember, this company has a lot of their revenue coming from a recurring revenue. And basically what that means is the company has a subscription model where the basically like what Adobe has, for example. So a lot of their customers do not actually change basically overnight, so because they actually pay in advance and they stay with them, and they actually pay of course for years and years, and so you used to use the software, because this is one of those companies. I'll show you exactly what the company does. Basically that have a software that is not easy to change, and in fact I think they talk about it here. And when it comes to the training part of this, okay, is to train someone to use their software basically can take up to basically for years to master it, and for that reason it's very difficult to switch from this company to another company very quickly and so on. So it takes a long time. So once they get used to it, companies stay with them. So we view Autodesk as a global industry standard computer aided design software, and this is basically what they do. The three main top basically things that this company does is the architect side of it, engineering and construction. So if you are an architect and you're designing whatever you need to design, if you engineer, if you use it basically involved in constructions, okay, basically 70% of their business comes from. So you will use their software, and like I said, it's very difficult to train those basically, and it's really wonderful to see there's a company that has almost a kind of monopolized stock market, if you like. And you can pause the video, but this is their bulls and say and bears say basically. So these are the people that are bullish on this company, and then the ones that are bearish on the company as well. You can pause it and have a look at that. But look at this, able to expand this annual recurring revenue based on growing average revenue per subscription as a construction modernization calls for more complex and more modeling features. And it says here an economic downturn could reduce, and again this way basically when we say this, we kind of anticipating there will be economic downturn, could reduce the rate of annual revenue growth for basically this company, which can happen, of course. So if the economy slows down, construction will slow down, engineering will slow down. For that reason, this can happen. So that's very more generic. So you can have a quick look and read this. But now what I'm going to do is I'm going to look at the financials of this business. That's the reason we came here. So at least now you have an idea what the company does and the company what is involved. Okay. Let us now talk about what the company is doing in terms of financial side of things. And like I said, it's a global industry standard computer aided design software. It basically exhibits switches costing across all industry exposures because of the complexity of its product. So that switching cost is what gives a wide economic mode. So currently trading $242 per share. EPS right now just less than $1 and 52 billion market cap, and it has a wide economic mode. Beta is slightly higher than actually 1. Normally 1 means is similar to what the market, but it can be very volatile if you like. Current P is 52, so it seems very expensive in that. But when you look at the forward P is about 29, and the 5-year average is 54. So based on the 5-year average, this actually seems very basically slightly cheaper. And remember, the sector is about 41 right now, and the S&P 500 we're looking at about 29. And when we look at the sector, we're talking about software. Okay, price to free cash flow of 49 and PEG ratio below 2. So when we talk about tech companies, we use a lot, or any growth companies, we like to use the PEG ratios because that's basically what it's used for. Okay, so anything below 1 is really good. Below 2 I think is still basically reasonable. But anything above 2 I will say is very expensive. Now they have a free cash flow of 1.2, free cash flow yield of 2%, and free cash flow margin of 18%, which is absolutely wonderful to see. Profit margin right now we're looking at about 17-18%, operating margins of 21%, return on equity of 65%, and total return the last 10 years, this including basically dividends and so on per annum, it was actually about 15%. Okay, so every single year for the last 5 years, this is what the company has returned. Return on invested capital 26%. Revenue right now is about for the last 5 years in terms of growing that revenue is about 16%, which is really good. That's high double digits. And look at this EPS as well, 36% in the last 5 years, compounded annual growth rate when it comes to EPS of 37%, which is really good. Current ratio is below 1. We normally want basically above 1, and the reason for that is because we want the current assets to cover the current liabilities. If it's 1 or more, that means basically it can cover, but right now it's slightly lower, but they do have some free cash flow here, which is quite nice to see as well. Now growth estimate for next year is about 11%. Growth estimate next year is about basically 12%, which is really good. So nice double digits. Current price, we've already seen it. According to Morningstar, we've already seen $275 per share. That's about 12% discount right now, which is quite nice to see. Fairly value, and according to Simply Wall Street, is actually overvalued by 24%. They think the price should be $195 per share. According to TipRank, 264, that's their price target for the 12 months, and it's about 9% upside from where we are. It's a moderate buy according to them. Average price for Seeking Alpha analysts, so they basically use similar sort of analysis, is 270, 11% upside from where we are now, and is a buy according to them. Now, in terms of Sharia compliance side of things, from business side of it, is actually software company. Basically, they are actively, when it comes to Sharia compliance, business screening is about 100%, 6.2 in terms of interest-bearing debt, and interest-bearing securities of 4%. And as you can see, the company has been buying back their own shares about up to 2019. Then they've increased it a little bit. I'm assuming they've acquired other businesses. They'd like to acquire other businesses. Again, it stayed stagnated for about 2 years, and then they start buying back again. So hopefully we'll continue buying back in the next whatever years, because the company does not actually pay any dividends right now. It will be nicer to see actually them buying back their own shares. Now, a couple of things that I want to look at now. I want to look at the charting and see if this company is actually, so I want to compare it with just the S&P 500 for now. Okay, so we're going to look at the performance, and we're just going to check the total return. Now we want to see if this company has actually beaten the S&P 500 over the last whatever years. Okay, so for the last 5 years, okay, we're looking about 41% for the company, 84 for the S&P 500. So the last 5 years, it has not beaten the S&P 500. But when you look at the 10 years, you can see 324 and the S&P 178%. Which is quite high. So it has beaten the S&P 500 over the last 10 years. But when you look at the last 5 years and last 3 years, it has not actually performed. So the last 3 years is, in fact, is about negative 14%, which is quite interesting to see. Now, if we go to earnings side of things, growth, basically expectations for moving forward yearly. So we're looking per annum right now. You can see about 7% next year, and then double digits every single year. If we just focus on the first 3, because that's where we got a lot of the analysts are expecting. This one is only 1%, so we're not going to use that information there. And then when it comes to revenue side of it, again, using the first 3, it's double digits every single year. Now, so it is really interesting company, and let me just quickly show you the rating side of things as well. Okay, as you can see, they've got 12 strong buys, 4 buys, 8 holds, and 1 sell. Okay, about 11% upside from where we are right now. So genuinely, it's a great company. I like the business model. Okay, the software, basically the SaaS model, is really good. At the same time, they have a kind of monopolized that market when it comes to construction engineering and so on, and architect and so on. But my issue with this company is the numbers do not look great, and basically the valuation is actually quite expensive right now. So that's one of the reasons why, when you look at the 5-year average of 54, for me that is not great. Okay, it's been too expensive. Right now it's okay. So if that's basically where we are now, according to PE gap, this is basically what we're using. So yeah, it is expensive. The PE is quite high, and at the same time, it's like I said, I love the business model, but I would love to own this company if it came back down to closer to the 52-week lows. Okay, so the 52 lows are $192 per share, $192. So if it comes down to below 200, then I will look at it again. And I remember, I think it was the last 5 days, the day I think it reported its earnings has actually gone up about 5% or whatever. Before then, it was actually down quite a bit. So the moral of the story is a great company, great software company. But right now, although it seems basically based on this, what we've just seen, some people are saying, yeah, expensive. Others are saying, okay, it's discounted. Even Morningstar, I would love to see another 10-15% basically below the current price. Then I would be definitely interested to see if I can actually add to the portfolio, inshallah. I will let you know if I do that, if I ever do it. And yeah, so that's the company that I wanted to share with you guys. I hope you're enjoying this type of content. Like I said, it takes a lot of time and effort to put these things together. So I would really appreciate if you can join us on the Patreon account. And as always, I would, if you have any questions, let me know. Have a wonderful day. Assalamu Alaikum.